is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew, this is Tuesday, May 27th. It is the start of Bitcoin Las Vegas, biggest conference of the year. Some major headliners there, including the vice president. And today we got two big announcements. Number one is that Trump Media, or the parent company for Trump Media, is planning on buying $3 billion worth of Bitcoin. And at the same time, we got news that a publicly traded gaming company, SharpLink, is going to be partnering with Consensus Systems, or Consensus as it's now called, to explore and develop an Ethereum Treasury strategy and to work closely with their new chairman, Joe Lubin, who, for people who are in the crypto world, will know as the co-founder of Ethereum, the founder of Consensus, and really one of the most influential and I would say important people in the entire industry. So I think maybe Joe saw what was happening in the Bitcoin treasury world and said, why not me? And there's been a lot of chatter about when, as a matter of not, if, but when we were going to see an Ethereum version, whether or not it would see the same kind of uptake, same kind of success. And here we are with our first data point. So two big announcements today. I think we should spend some time on this since it's top of mind, frankly. There's this really interesting, I would say, intersection or spillover from crypto into the traditional markets in a way in which we just have not seen in other cycles. There's been examples of it, like, not to be clear, like Bitcoin miners and other companies have gone public and we've seen ETFs, but there seems to be really this huge blurring of the line. So tell me, what's your point of view on all this stuff?
Yeah, it's really interesting. I think it's more on this trend of the institutionalization of crypto. In past cycles, we've seen TradFi get involved in crypto, but it's been at the tippy top of the crypto market. And so maybe this is also just, I guess the counter thesis is maybe this is just TradFi.
This is a sign that things are topping.
Yeah. Once again, TradFi coming in at the tippy top to top tick this thing.
Yeah.
I think this does seem a bit earlier though in the cycle compared to sort of the other. So for example, in the 2017 cycle, we saw a bunch of crypto companies go public, literally in the last quarter of 2017, sorry. And that was right as the market was just about to start tanking. And that was they were mostly Bitcoin mining companies, to be honest with you. That was pretty much the only sort of flavor of company that went public. In the 2021 cycle, we saw still some Bitcoin mining companies, but we also started to see a couple more exotic crypto companies going public. We had Coinbase go public. We had a bunch of different exchanges in Canada go public. WonderFi, for example, which obviously we now just saw got bought by Robinhood. And they sort of came in, I would say, in the last 6 to 12 months of the market. It wasn't all in the final quarter, the way it sort of seemed to happen in 2017. So, and then this cycle, we've been seeing kind of a steady inflow of companies going public. And obviously the most important one of which is, it wasn't even that it went public, but the sort of obviously MicroStrategy, which has been a long time sort of public stock.
Yeah.
Which then pivoted to becoming essentially a Bitcoin treasury company. And effectively, we've talked a lot on the show, issuing debt to essentially buy Bitcoin. This market cycle, that playbook is now being replicated en masse. So we've seen a bunch of new smaller companies, effectively do the same strategy. Matador, for example, on the Canadian market was doing essentially Bitcoin plus with sort of a gold gold tint on top of it. We've seen Sol Strategies. We had the founders of that on the pod recently to talk about that. And now we see Trump Media quasi pivoting to becoming a Bitcoin treasury company with a $2.5 billion raise to essentially just buy Bitcoin. And then obviously the Joe Lubin ETH treasury company. I believe they raised $425 million from a plethora of really good investors. I was seeing Parify, Polychain, some of the really top sort of crypto funds in the space participated, along with Consensus.
Yeah.
And the stock went, from $6 to $30 in trading. So, clearly there's a ton of institutional TradFi demand for this type of playbook, I guess.
Okay.
I think what we're going to see, I think this is actually in a lot of ways the final inning of this playbook for the major crypto assets in terms of like Bitcoin, Ethereum, and Solana. And the next wave is going to be smaller assets. So I think we'll see like pretty much any crypto asset that's in the top 20, top 50 is a potential target for this because it has enough liquidity and enough sort of awareness and frankly size to potentially have one of its own sort of treasury companies. So I think we'll see a mad sort of dash over the next 6 to 12 months to spin up more of these in sort of more and more, I guess, quote unquote, exotic type assets.
This sharp link chart, I'm sorry.
No worries, yeah.
Hold on. Can everyone see my, this is just on my other computer. Look at this thing and bang. You see that? That is.
Yes, that's $6 to $45.
Yeah, $6 to $45, and it's traded 42 million shares, and it's a $45 stock. So what is that? $1.6 billion, Andrew? 45 times 40, 4 times 4, 16. Yeah.
No, but I think they also issued 69 million shares.
I know. It's back of the envelope, but that is just completely, absolutely bonkers. So yeah, what does this mean? Well, it means that there's clearly a lot of demand. And honestly, like if you're an institution, you can get into these deals at NAV or close to it. And you think after you close on one of these announcements that the stock is going to go up 10x or 8x or 5x, then you're in a pretty good position, right? And it's interesting to see some of those other guys that you mentioned because they were. It looks like it was a similar cast of characters who were involved in the Janover Solana strategy or the DeFi Development Corp deal as well. So pretty interesting news that we're seeing now. It's sort of. I'd love to understand a bit more about what their strategy is overall, because ultimately, like if it's a Ethereum treasury strategy, I think maybe the thinking is, well, it'll trade at a premium, they can issue more shares, they can buy more ETH, and then they can accrue ETH per share, right? So it's like a way to like compound ETH per share to grow NAV. But if the investor is just looking at it kind of dollars for dollars and saying, you can buy ETH in an ETF, you can buy ETH via this vehicle, you are kind of paying kind of bit of a pricey price for the exposure to the ETH, right? So I think you've got to kind of believe that there's a momentum to the strategy of growing through acquisition. I think similar to how MicroStrategy grows through acquisition, it is accretive to individual shareholders to get more ETH per share, or more in Strategy's case, more Bitcoin per share. But it also seems like maybe the market's just kind of buying every one of these deals. And I just got a call from a salesman, just said, a crypto treasury transaction for us to talk about, which like maybe it's another one coming to market. So I don't know. It just seems like there's a lot of this happening.
Yeah, I suspect it's the latter. I think that there's actually more scope to increase like Ethereum per share or Ether per share than there is for some of these Bitcoin treasury companies, just because there's way more things you can sort of participate in the Ethereum, like directly in the Ethereum.
I know, but then you get sort of a narrative drift, right? Because like if you listen to, I sat in on a dinner with the strategy people before, and it was sort of, not to go into too much detail, but they basically, and sailors talked about this as well, so in the public, which is basically that this is about owning a hard currency asset that's as a treasury. If you're a corporation, you want to have a treasury, you don't want the value to go down, you don't want it to be eroded through inflation. This is the way to go. Simple. Ether, I get what you're saying. It's like, this is an asset. It's like an ecosystem asset. It grows as Web3 scales and, all these applications are getting launched. But like, that's a lot to explain to someone, right?
Yeah, I mean, I think that's true. And there is also like operational difficulties to having a public company participate in like DeFi farming.
Yeah.
Or stuff like that. Like there's also like way more custody issues. If you're putting funds into like a decentralized exchange, then you have to audit that decentralized exchange, all the contracts, make sure it doesn't get effectively rugged. Like there's a lot of issues. I think there's like I think to me, like, because there's so many issues to participating in the DeFi ecosystem, there's more scope for management to provide value. So I guess like I understand, I guess the more complicated you get, the more risk there is, but there's also like more essentially potential return for shareholders. I think right now the market's not even close to being there. Like I think just do very straight vanilla, strategy playbook, and that will be enough. because I don't know. I guess like when I got into the crypto space, it was very difficult to buy crypto assets. And I would say it's become way, way easier over the last 7-8 years. But at the end of the day, if you're, a traditional investor that can only essentially buy, securities that are on the crypto asset space, and also you don't get access to the TradFi distribution because, brokers can't sell crypto assets to their clients, then bringing sort of the crypto asset class to the TradFi market still makes a ton of sense. And if that's the case, this playbook is going to get replicated a ton of times because, there's 17,000 crypto assets on CoinGecko. And even if only 1% of those are going to essentially go public on the public markets, that's like 170 crypto assets that could go public. Even just 0.1%, we're looking at 17 more crypto assets. And like, it seems pretty likely to me that we could see that, right? Like pretty much every asset in the top 20 could be, minus the stablecoins, could be,
could be Treasury strategy.
Treasury strategy. It makes a lot of sense. I mean, I think we'll see some like diversified, like public companies that diversify across a basket of them as well. I think like that will be another sort of like interesting angle to this. But yeah, and also the crypto asset class is big enough now that it can handle those types of flows.
You're right. I mean, even the top 20 is like, you're still talking multi-billion-dollar.
25 billion.
What's that?
25 billion. The number 10 crypto asset is Tron, and it's $26 billion market cap.
Yeah. So there you go. All right. So so let's take a step back. Why are people buying all these things? Like, what is the reason why Bitcoin's at 110 grand right now, and why, even these assets that haven't had the same kind of run that Bitcoin's having are seeing, well, we shouldn't say these assets, but at least in the case of ETH in this particular vehicle, like there's this huge uptake despite the fact that Ether itself has not, frankly, performed the same way a lot of people had hoped that it would. I wonder if maybe folks are thinking, okay, well, one of the reasons Bitcoin was up a lot is because of MicroStrategy buying. And if Ether gets its own vehicle that's doing something similar, then, well, maybe that's going to put a bid under that market. I mean, Ether today is outperforming Bitcoin. It's up not much. It's like up 4% versus being up 1% after being an underperformer for years. So is that maybe part of the thinking here with that? And then more broadly, like what's with the fervor in crypto all of a sudden other than number go up?
Yeah, I mean, I think you hit the nail on the head, right? Ethereum already has an ETF. The missing ingredient is that it didn't have its own MicroStrategy the same way Bitcoin did.
Yeah.
I think there's still that other aspect that, we've talked a lot about on this, which is this like shift towards hard assets. And I think Bitcoin is uniquely suited to sort of suck up those flows. Kind of like the gold money, you know what I mean? That would go into gold as an asset, and increasing percentage of that is going into Bitcoin. So I think Ethereum is not going to benefit from that, but I think this is definitely a huge catalyst for ETH. I think if we can get like a staking ETF as well, that will be another really big unlock. But
in the US, because we have them in Canada.
Yes, in the US.
Yeah.
So I think those are the two big unlocks. And I think just a broader sort of push towards risk assets. I mean, I don't know. What do you think?
I think there's a lot of different things kind of coming together at the exact same time. So I think that the interest in Bitcoin is driven by several different factors. One thing that I've harped on a lot is that regulatory headwinds have turned into tailwinds, and there's just generally more openness from retail and investors and from enterprises and from institutions and from governments to embrace Bitcoin. So that's one part of it. I think another part of it may have to do with just the uncertainty that people have around what the direction of financial markets will be in the next little while. There was this view that maybe US dollar denominated assets would fall out of favor after the Trump sort of tariff shock of April. A lot of those names have bounced back quite a lot. The market is up from Liberation Day. And so everyone who is kind of pro-Trump is screaming victory. But at the same time, Canadian and European markets are way outperforming the US market this year and since Trump was elected. So there is sort of, it depends on your time horizon. I think there is some question marks around, will there be a rotation out of US dollar denominated assets? What happens to the dollar? What happens to treasury yields in an environment where the US is more isolationist? I don't know that that's driving Bitcoin higher, but I think it's probably causing a lot of investors to say, okay, we need to add some diversity to our portfolio. Maybe the equity basket we always owned is not, we can't take it for granted the way we used to. And so we should be looking at some other options. And on the margin, maybe that's helping. I think also on the bond side is probably more pronounced, where Treasury yields are going up and long bond yields across the world are going up. And there's been some coverage on this, Japan's 30-year bond, the US's 30-year bond, all of these things are cracking key milestones in terms of yields. And so the question is, okay, there's some underlying uncertainty around, can heavily indebted Western nations ever pay back their debt or grow out of their debt? And with the current bill in Congress having passed the House and in the Senate, the big, beautiful bill, there's only going to be more debt, whether it's Republicans or Democrats. Like, there's just no path that I can see in the US where deficits shrink meaningfully and where the debt becomes more manageable rather than less manageable. So you taken as a whole, the regulatory side of things is improving. You've got the equity market is in flux and maybe going through a rotation. The 60-40 portfolio looks a little bit less certain, with yields still rising because of the debt concerns. In that environment, alternative assets should do well. Bitcoin and all cryptos, I think, fit into that. Bitcoin is definitely more of the digital gold store of value. But I think people are looking at the whole complex and saying this is something that's different. We don't know what it is exactly. Some of it is its growth, like it's a technology paradigm. It's going to change the world, maybe. It's an alternative asset that's not necessarily correlated. And so we should be spending more time on this. Like, that's the best that I can do. And then to combine with, in the short term at least, there's definitely a risk on in the market. The Trump plan is to propose tariffs and then postpone tariffs. Basically, you propose them, the market tanks, then you postpone them, and then the market rallies. And I think we're in a postponement wave. It's sort of like all of the proposals happen at once, and then the postponements are being brought out on a delayed fuse. So each postponement is actually adding fuel to this fire, weirdly. So I don't know. There's a lot of different factors at play. Some of them are more general, more long-term, and others I think are more tactical, short-term. But taken together, they're putting a bid under this whole market.
Yeah, I agree.
Yeah, it's interesting. So what's new with you, Andrew? You got anything else for me today?
What else is going on?
Yeah, what else is going on? I mean, we're always talking about the markets, and why not? Because it's just endlessly fascinating, honestly, to try and understand what's going on in the world. But anything sort of more close to home?
Yes. Well, of course, I'm going to be taking the next week off for my wedding. So super excited about that.
Really? Getting married?
Yes. I'm in Paris right now, and then Italy for the wedding, which should be fun. Well,
I've always said that the ultimate Chad move is to get married and have children and settle down.
Yes, well, you're ahead of me on that.
But it's very exciting. So tell us about the wedding.
Yeah, well, I'm sad to be missing our DeFi Decoded for the next couple of weeks, but some much needed off time, and it should be good. So just a bunch of people in Italy next week, this weekend, I should say.
Yeah.
So probably.
Well, thank you for my invitation. I appreciate it. As you know,
you were invited, but
I was, and I appreciate that. We could have done like a dinner jacket DeFi Decoded from the or something. Yeah. DeFi Decoded. Amalfi Coast edition or wherever you are. Yeah. Anyway, well, listen, I mean, take the time off, enjoy yourself. Congratulations, everyone here and all the listeners of DeFi Decoded. Wish you all the best, and we'll touch base when you're back. And in the meantime, I'll be doing some episodes with friends of the pod, bring back some good guests to help us make sense of everything that's going on. By the way, if you have any suggestions, please feel free to reach out to us. You can send us a DM on Twitter if there are any guests you have in mind. We're really interested in macro markets at the moment, and politics and regulation. I think those are the main drivers right now. But always also keen to talk to Web3 builders, creators, anybody who's doing really cool stuff who could help be responsible for helping us with the next leg up in this market, right? Because ultimately it's got to come from the fundamental on-chain use cases. So,
well, you think.
You would think.
It
Maybe
might
not.
be the TradFi market.
What's that? Yeah, well, once the TradFi market globs onto something, anything can happen, as we know.
Yeah,
So,
and you're playing a pretty big role in sort of helping some of these things get to market. So we,
well, I've always had one foot, as you can tell by my outfits, I've always had one foot in the TradFi market, and one foot in crypto. So, and I've always said actually that with time, the line that divides these things will become more porous, that it'll be harder to distinguish. And I honestly think all of the recent moves to bring crypto to TradFi, to bring regulations to market, to bring more enterprises and banks into this space has all helped to contribute to the blending of the roles and to the blurring of those lines. So I think that's a good thing. I think moving finance on chain and making people more aware of the value of these assets is going to be good in the long run. So yeah, I am playing a role and I'm happy to do so.
Yeah, I think what's interesting about this market is I think this cycle is where the lines are very definitively blurring, and next cycle might be the cycle where they're fully blurred, as in that's when we put stocks fully on chain and we have it's not even right now, this is the cycle where we bridge the two, we bring crypto assets to the TradFi markets, and maybe next cycle, or maybe even the very tail end of this cycle is when we start to see them fully merged.
Well, a lot of this is, yeah, go ahead.
No, and that's essentially when we have stocks fully on chain. That's kind of almost like the crypto singularity, right? It's it's when crypto and TradFi are fully merged into one pool.
The gating factor for this is regulation. Ultimately, it's not. We know that we don't need to wait a whole cycle for people to see the value of tokenized real world assets. We already know that from stable coins that there's a clear product market fit. Of course, people want to be able to transact 24/7, settle instantly, and own any kind of asset in a digital wallet. We know this to be true. We just need to make it clear and easy for people and businesses to actually do that in size. And that's not true yet because the rules are not in place.
And we actually saw the very, very first sort of hints of this with Soul Strategies announced that they were actually going to tokenize their stocks, their stock, using Superstate on top of the Solana blockchain. That actually got announced about a month ago. Actually, maybe even less, maybe just a couple of weeks ago. So maybe it's worth having Leah back on to chat through that.
Well, they've been a pioneer, those guys. So I'd love to touch base and see how things are going.
Yeah, for sure. I thought that was really cool. I mean, that is really the first, from what I can see, first truly tokenized stock. So.
Well, and also Kraken, maybe we'll save this for another episode, but Kraken's buying NinjaTrader and has just announced tokenized securities, right? And you think of some of these platforms like Robinhood, Coinbase, Kraken. Coinbase has the users. It's got over 100 million users. Most of those people are using that platform to buy small dollar crypto, right? But if you've got a relationship with the platform and the lines become blurred, then these places can become one-stop shops where you can own any kind of asset. And eventually the rails, we believe, will be tokens, right? Crypto rails. And so being able to buy Bitcoin, Ether, Apple, NVIDIA, real estate, and other digital goods that represent real assets is going to become completely interchangeable. People will not know the difference, right? As they're interacting with these platforms. Now that's all in a custodial model, right? So the question is, will this exist in the non-custodial world where individuals own and control their own keys and all that stuff? I mean, I think it's kind of like choose your own adventure, but the tokenization part is the part that's actually happening.
Yeah.
All right, good way to end it, Andrew. Congrats. Have fun. Welcome to the next stage of life. We're all rooting for you, and we'll see you when you get back from your honeymoon rested and rejuvenated.
Thank you, sir.
All right, take it easy. That's it for this week's episode of DeFi Decoded. I'm Alex with Andrew. We'll see you next time. Take care. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized. or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.